Capitec has inked a deal to buy Avafin. The bank will pay 26.3 million euros to increase its holding in the international online consumer lending group to 97.6%. In 2017, the lender took up a 40% stake in the firm and at the time said it provided the group with the opportunity to gain experience and diversity in its income sources. Now, Capitec says the controlling interest makes sense for several reasons. Chief amongst that, Avafin is closely aligned to Capitec's client-centric retail business model and is well positioned for growth. Strong, that's how Homechoice has described its full-year results. The company has posted a 28% jump in operating profit. This is due to gains at the group's fintech division. That unit now contributes 92% of profits and during the period managed to increase revenue by over 30%. This helped offset a poor performance from Homechoice's retail segment, where sales were close to 24% lower in 2023. A final dividend of 83 cents has been declared. This takes the total payout to 153 cents, which reflects a growth of 9%. Attx moved to sell 30% of the Waterfall Investment Company to the Government Employees Pension Fund has given its balance sheet a boost. The transaction was used to reduce the Real Estate Investment Trust's interest-bearing debt by 2.9 billion rand. This helped to bring the firm's interest cover ratio to 1.93 times during its half year. That's from 1.72 times previously, with gearing now sitting at 25.3%. For the half year, a dividend of 30 cents per share has been declared. This is largely in line with the previous period's payout. Looking ahead, the firm has revised its guidance for distributable income per share for the full year to between 10 and 12.5%. Attx has also announced that it will sell its remaining stake in Mass. This will generate over 773 million rand for the group. The company says the funds will be used for income-generating activities. Old Mutual has forecast profit growth for its 2023 financial year. The financial services group expects headline earnings per share to be between 18 and 28% higher. It says it's benefited from gaining market share across its segments. The firm will open its books on the 27th of March. Propop has warned investors of a slump in the property owner's half-year distributable income. It expects that metric to be 8.3% lower when compared to the prior period. That's as the devaluation of the Nigerian naira against the US dollar has had negative effects on the financial contribution from Ikeja City Mall. That situation has led to Propop incurring foreign exchange losses, and it's also had to grant tenants discounts. Given the situation in Nigeria and the high levels of uncertainty in South Africa as the country gears up for elections in May, Propop has already taken the decision to not pay an interim dividend until the risks subside. Further detail will be provided when the group publishes its half-year results on the 13th of March. British American Tobacco is evaluating the possible disposal of a small part of its holding in India's Attx through an on-market block trade. The move would generate funds that the maker of Daniel cigarettes could use to pay down debts. That would help the firm move faster towards the leverage range at which it could resume share buybacks. BAT has cautioned that there is no certainty that the transaction will go through or what the terms of the deal could be. But the company says a further announcement will be made when appropriate. Anglo American Platinum has broken its silence on the qualifications of former board member Tabi Leoka. The miner says it failed to follow up and confirm that she held the PhD qualification. Leoka resigned from Amplats in January following a Business Day report that Leoka didn't hold a PhD in economics from the London School of Economics, as she claimed. Amplats has stated that it will tighten up its governance processes following this incident. Electricity Minister Josienzo Ramokgopa expects to be out of a job by year-end. Speaking at 91's Infrastructure Forum in Johannesburg, he said ministry will no longer be required by the end of 2024 and that the immediate electricity crisis will be mostly resolved by then. Ramokgopa added that South Africans should see an improvement in supply within the next 3 months. The National Union of Metal Workers of SA, meanwhile, is set to embark on a national shutdown of all road accident fund offices on Thursday. And that's as it demands the removal of CEO Collins Letsoalo for alleged gross incompetence and presiding over the disastrous state of affairs at the state-owned entity. NUMSA General Secretary Irvin Jim says the fund had been served with a 48-hour strike notice and will hand over a memorandum of demands to the Minister of Transport.